Manufacturing index up marginally to 50.0 in February. The International Monetary Fund initiates discussions with Gabon towards a possible financial arrangement. Plus, General Motors plans to sell its majority ownership stake in General Motors East Africa to its Japanese partner Isuzu Motors Limited. Let's get started. And we're beginning here in Nigeria. The manufacturing activity increased marginally to 50.0 index points in February from 48.6 recorded in January. That's according to FBN Quest's latest Purchasing Managers Index report released today. FBN Quest attributes the increase in the headline reading to a slow pickup in economic activity. According to the report, the high cost of imported inputs due to forex scarcity, power shortages, and the steady increase in inflation has been painful. The research firm, however, notes that import substitution strategies are beginning to gain some traction with the credit support from the CBN and state investment vehicles. And to the markets now, starting off here in Africa, Egypt rebounded from Tuesday's loss back to the 12,000 mark at intraday, up 0.84%. Global rating agency Fitch had indicated that Egypt's rebalancing continues ahead of challenging year and says that rising foreign exchange reserves, private capital inflows, currency appreciation point to progress in Egypt's external rebalancing in early 2017. Looking at the slide there, the market in Johannesburg was looking good at intraday. However, the Nigerian market was down 0.07%, and the Nairobi Stock Exchange Index closed lower on Tuesday. In the Middle East, the Saudi Stock Index was up at intraday as Middle East fund managers have turned more bullish towards Saudi Arabian equities on hopes that corporate earnings may finally have bottomed out after a slide due to low oil prices. The market was up 0.04% at intraday. And of course, Qatar Stock Exchange was trading high at 0.47%. Dubai, a financial market, was down 0.27%, and Abu Dhabi was up 0.38%. Markets in Europe opened higher this Wednesday as investors focused on earnings and fresh data releases and digested President Donald Trump's address to Congress. Let's put all of these into perspective with Olaf Krieger, my colleague at the Frankfurt Stock Exchange. Good afternoon, Olaf. Thank you very much for joining us. Now it's all about Trump's address to the Congress. I believe the investors are digesting this speech of his. Did his speech make investment sense for the markets?
Until now, investors are still left in the dark on what Donald Trump has said in his speech on Congress. And this is also quite remarkable because there's a lot of money in the sideline to invest, but investors and traders are still waiting after this speech for some more concrete details, for some more information. What is Donald Trump going to do precisely? $1 trillion. When and where will he going to invest to get things started in the U.S. economy? And that's what he going to do. That's what he announced always in his campaign. And one analyst pointed out some very interesting. Trump has to deliver now very quickly in terms of get things started. Otherwise, investors will hit the sell button very quickly. So to summarize, action speaks louder than words.
I believe very soon his details may come out. I mean, the details of its economic reform plans. Now let's quickly look at the euro areas. The latest PMI figures are on the street. What does the PMI show of Eurozone's largest economies?
It's still a mixed picture in the Eurozone, in Europe. I have to say, so many economists in this alliance are still in trouble. Let's have a closer look on the broader picture. Let's take Greece, for example, mountains of debt. Let's take Italian, for example, with a banking sector which is in hot water. In France, of course, with the high unemployment rate. So they have, all of them, to increase productivity. They have to increase competitiveness. But, for example, the austerity policy in Greece is the big burden because austerity kills profitability, that much is for sure. So still a mixed picture, and one thing is also for sure that Germany, the biggest economy in the Eurozone, in Europe, is still strong.
Well, talking about Germany, where you are right now, and the latest unemployment numbers are also out. What are the details?
Well, Germany's unemployment rate had a record low in February, I have to say again, because the situation and the atmosphere at the German labor market is strong since years, as far as I know, as far as I'm concerned. And I have to double check that the jobless rate remained unchanged in February at 5.9%. It's the lowest level since German unification in 1990. So the situation on the labor market is quite strong. That's also what the CEO of the German labor agency, Mr. Wiese, said. So this is a good sign for the German economy, and hopefully it stays that way, because everybody here in Germany is asking how we will go and come along with Donald Trump as the new president and economic questions.
Well, I believe Trump earnings and fresh data will continue to drive the markets. Thank you very much, Olaf, for your time. In the U.S., stock index futures point to a higher open following President Donald Trump's speech to Congress. Markets closed lower in the previous session. The Dow dropped 0.12%, breaking the index's 12 straight sessions of gains. Investors are digesting President Trump's economic plans, which he described in his first address to a joint session of Congress. He outlined plans for a $1 trillion infrastructure investment, healthcare reform, immigration reform, and tax relief for businesses and the middle class. Before the bell, earnings are expected from Best Buy, Lowe's, Dollar Tree, and Icon Enterprises. And after the bell, look out for reports from Broadcom, Box, Planet Fitness, and Shake Shack. There's a lot of